Good afternoon. It's Wednesday, the 29th of April, 2026. Today, we've witnessed one of the most volatile sessions on the ASX in recent memory. Investors are grappling with a massive inflation surge, a strengthening US dollar, and shifting expectations for the Reserve Bank's next move. The benchmark S&P ASX 200 index closed 0.27% lower at 8,187 points. This marks its seventh consecutive day of losses. This is the longest losing streak since mid-2022. Early trade saw a much deeper drop of nearly 0.74% before a midday recovery. While the headline index was down, the market breadth was actually split. 6 of 11 sectors ended higher, but the heavyweight sectors faced major headwinds. Healthcare was the day's worst performing sector, falling 1.35%. The drag was led by a historic event in the medtech space. Shares in Cochlear plunged 40% in a single session. This massive sell-off followed a drastic profit guidance downgrade from the medical giant. The company flagged significant operational challenges that caught the market completely by surprise, erasing billions in market capitalization instantly. Turning to the financials, the sector declined 0.60%. 3 of the Big Four banks were caught in the broader market sell-off. ANZ was the notable exception, rising 0.4% to $36.18. The bank announced a strategic move today. ANZ plans to buy out its French payments joint venture partner, Worldline, as it seeks more control over its digital transaction infrastructure. The materials sector tumbled 0.38%. The broader materials index reached a 3-week low earlier in the morning. Mining giant BHP fell 2.3%, while Rio Tinto and Fortescue followed with losses of nearly 1% and 1.4% respectively. These miners were weighed down by 2 factors: a strengthening US dollar and elevated oil prices, which have breached the $100 per barrel mark. Now, let's look at the focal point of the day: the ABS March Quarter Consumer Price Index report. The numbers were quite jarring. Headline inflation accelerated sharply to 4.6% in the year to March. This is the highest level we've seen since September 2023. The biggest driver was automotive fuel, which surged 32.8%. It's the largest monthly increase in the series since it began in 2017. This spike is largely attributed to the ongoing conflict in the Middle East, causing massive ripples through the global energy market. Housing costs remained persistent, rising 6.5%, while general transport costs added another 8.9% to the annual figure. However, market analysts noted a small relief factor. Trimmed mean inflation, the RBA's preferred measure, rose by 0.8% in the quarter. This puts core inflation at an annual rate of 3.5%, which was slightly lower than some worst-case forecasts of 3.8%. So, what does this mean for the RBA? Before today's data, the market was pricing in an 85% probability of a rate hike in May. Following the slightly softer core inflation print, traders paired those odds to roughly 70%, still a high probability but not a certainty. Commonwealth Bank maintains its call for a 25 basis point hike to 4.35%. Core inflation has now exceeded the target band for 3 quarters. Amid the macro gloom, 2 companies delivered exceptional performances that completely bucked the downward trend. Codan Limited was the standout performer of the ASX 200. Its shares surged over 15% to close at an all-time high of $42. This single-session move added approximately $330 million in shareholder value, triggered by a massive profit upgrade. Codan's communications segment achieved a 30% profit margin a year ahead of schedule, fueled by strong defense demand for software-defined radios. Their Minelab division also benefited from the high gold price environment and successful new product releases globally. Lynas Rare Earths was another winner, gaining over 5%. The stock has been a major beneficiary of the rotation into critical minerals. The company achieved a major milestone: the first commercial production of heavy rare earth oxides outside of China, and secured crucial Malaysian processing approvals. As the only fully integrated producer outside China, analysts say Lynas provides a unique sovereign risk premium in the current geopolitical climate. The energy sector rose 1.27%, buoyed by crude oil prices. Ampol reached a 2-year high, and Origin Energy climbed over 3%. M&A activity also made waves today. Media surged after Pacific Equity Partners lobbed a $754 million takeover bid. Gold miners saw a mixed bag. Capricorn Metals rose 2.5% on strong production, while Westgold Resources fell 3% on cost concerns. Looking at the charts, the technical outlook for the ASX 200 remains cautious. The index failed to reclaim its 200-day moving average. It's currently struggling near 8,802. Analysts warn of a potential further correction toward the 8,600 support zone. All eyes are now on upcoming U.S. tech earnings from Alphabet and Microsoft, which may provide a much-needed boost to global market sentiment. This comprehensive ASX market wrap was brought to you by V2U Research. We provide the deep insights you need for today's complex markets. If you found this update useful, please like the video, subscribe to the channel, and turn on notifications for regular market insights. Thank you for watching. Trade responsibly, manage your risk carefully, and we'll see you in the next Australian market update. Disclaimer: this content is for informational purposes only and does not constitute financial advice. Always consult with a professional advisor.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.